This is the only breakout strategy that I use on a daily basis. It's stupid simple and incredibly reliable, and also the reason why I'm able to pull profits like this, and this. Even a beginner couldn't mess it up. I'm gonna give you the full strategy alongside 5 simple steps so that you can implement it today. And we're also gonna have a look at a few case studies to show you that it really works. This is the #1 mistake that traders consistently make. You see, trading breakouts might just be the most popular trading strategy of all time. But that also means it creates very predictable patterns that we can exploit. Let me show you exactly what I mean with this example. So we have a classic rectangle pattern. We have resistance at the top and support at the bottom. Most traders are waiting for one of 2 things to happen. Either a break above or below the rectangle, and then they're going to trade it as a breakout strategy. So let's continue to play out price here. And as you guys can see, we had a massive breakout to the upside. This is exactly when the majority of traders will go long. But if I now continue to play out price here, you will see that they would have gotten annihilated. Now that happens because of one specific reason. But before I show you the reason, there is one simple mistake that sets traders up for failure. If I play out this market here, you will see that it is just the most choppy and most consolidating market of all time. And this right here is exactly what the majority of traders are getting caught in, all because they did not pay attention to time. Right now it's 6 o'clock. I mean, we are just bound to have consolidating, boring, and flat price action. And then there's the most obvious reason for failed breakouts. And that is people using the wrong indicators. I mean, have a look at this. You have a breakout indicator that told you to go long right here. But if I now play out price, you will see exactly why that was a terrible, terrible idea. So how do we fix the problems that 99% of traders face? Here's a secret. 9 out of 10 times, the first breakout fails. And so the fix to this problem is instead always wait for the second breakout. Let me show you exactly what I mean when I play out price here. Boom, we have the initial breakout to the downside. Now, after watching this video, you know that there's a high chance that this breakout is going to fail. The second breakout happens at the high. So let's continue to play out price here. And would you look at that? The second breakout worked and the first one failed miserably. So always trust the second breakout and never trust the first one. Now, the reason for this is actually quite simple. Millions and millions of traders go short here because that was the first and initial breakout. But 99% of traders consistently lose money, and that is exactly why we want to be on the opposite side of their trade. Now, the second mistake is the easiest way to ensure low volatility and no momentum. Luckily, the fix is just as easy. Trade between 9:30 and 11:30 a.m. EST. That way you always ensure to trade when volatility is present and with momentum. So with this very next candle is exactly when you want to be participating in the market, because that's when the rest of the world is also participating. Now, what if I told you that there is one indicator that can make you avoid unnecessary losses consistently? One that completely outshines indicators like this one. Now, to get this indicator, you have to be at your charting software. In my case, I use TradingView. I'm going to go into the indicators tab, and then I'm basically just going to search volume. You'll see a bunch of different indicators here, but you have to choose the one that simply says volume. Now you'll see all these volume bars at the bottom. And yes, I know what you're thinking. This is a very, very simple indicator. And that is exactly why we're going to do a few changes. So I want you to right click on your volume and hit settings. We start in style. We have to enable the volume moving average. And if you want to, you can increase the size of that moving average to make it easier on the eye. Now here is the critical part, okay? We have to change the moving average length from 20 to 80. Once that's done, well, then you have your volume indicator ready. It's essentially a way to differentiate between weak and strong moves to ensure that we're always trading with momentum. Now, this volume indicator is powerful, but there's a specific way to use it within my 5-step system. A way that most traders completely miss, and this sequence is exactly what determines random wins or consistent profits. Now, I want to show you exactly how we use this indicator to our advantage, because again, we're not just looking at random volume here. So we have a classic rectangular pattern here, and as you might be able to tell, the first breakout here failed. We already established that 9 times out of 10, the first breakout fails. So we wait for the second breakout, which happens here, right? First, price came down. So we wait for the second breakout, which happened with this massive, massive candle. But there's one specific way that we determine whether this is a high probability trade or not. And that is with the volume of the breakout candle. So I have one specific rule. The volume of the breakout candle has to close above our 80 period moving average. And as you guys can see, this massive candle here definitely closed above our moving average. So all there's left for us to do is to enter at the range high once price comes down and retest that area. I've created my buy limit, and yes, I always use limit orders. Now all I have to do is lean back and let my system do the heavy lifting. And there you go. I mean, you could have made thousands of dollars in a matter of just 2 hours and 25 minutes. Here's what's really important. You need to give your trade breathing room, which means you have to enlarge in your stop loss. This is one of the largest mistakes I see traders make. I mean, imagine if I tried to predict price reversal with 100% accuracy, I would have had the tiniest stop loss and I would have been stopped out. Now let's have a look at an example where volume doesn't follow through. We have the first breakout that happened at the low of the consolidation, but as always, that fails 9 times out of 10. So we wait for the second breakout. Now, why did the second breakout fail? Well, let's have a look at the breakout candle. So if we come down here and have a look at the volume, you can clearly see that it did not close above our moving average. And that is exactly why this breakout failed. And I would have never known had I not used this volume indicator. So let's break down the step-by-step system so that you can implement it today. So step number 1 is to mark your trading range. Again, this is very simple. We grab our line tool, we draw the highest point of our range, and then we do the exact same thing for the lowest point of the same range. Step number 2 is to wait for the initial breakout. Step number 2 is to wait for the initial breakout, which again is probably going to be a fake out. So let's play out price here and see exactly what happens. There we go. That's the initial breakout. Now, chances are this is indeed going to be a fake out because again, 9 times out of 10, the first breakout is a fake out. And you probably guessed it, the next step is to wait for the real breakout, which again is the second breakout. So at the highs of this consolidation, because the first breakout happened at the lows. Let's continue to play out price here and see if we can get that second breakout. And there we go. Price broke out to the upside. And this is the breakout that I'm going to trust because it's the second one. The next thing we do is confirm the breakout candle volume. As you guys can see, the candle that broke out of the consolidation closed well above our moving average. And that confirms our last step, which is to enter our trade at the range high. So I'm going to grab my P&L tool here. We would have already been filled on this trade. I'm going to keep a fairly large stop loss. And then I'm basically going to target a 2-to-1 risk to reward ratio. So we placed our buy limit and now all we have to do is lean back and watch exactly what happens. As you guys can see, I mean, this was just picture perfect. You could have made well over $1,000 in literally 25 minutes of work. And I hope you understand just how important it is that you do not trade the first breakout. And I don't care how clean it looks. I mean, have a look at this breakout candle, right? It even closed above our moving average here, looking at the volume, but it would have still failed. Because again, 9 times out of 10, the first breakout is going to fail and the second one is going to be the home run. Let's have a look at an example where most traders fail. We're going to do the exact same thing as I just broke down in the step-by-step system. And the first step is, of course, to mark our trading range, which in my case is this high and the low that we're watching down here. So now all we have to do is wait for the first breakout, which again is probably a fake out. Let's play out price here and there we go. We have our initial breakout. And again, look at the volume behind this breakout candle, but I'm still not going to trust it because it's the first breakout. So let's continue to play out price here and see if we can get that second breakout at the highs. There we go. Would you look at that massive breakout to the upside? And again, the volume really followed through, right? We had a massive closure above our moving average. So that confirms that we're trading with momentum, and all we have to do now is place our entry at the top of this consolidation. Now again, crucial step, make sure that you enlarge in your stop loss and let your trade breathe. So I'm going to do the exact same and target a 2-to-1 risk to reward ratio. I'm going to place my buy limit here, and now all I have to do is let my system do the heavy lifting. There we go. Would you look at that? Now here's the thing. Most traders would have completely messed up their trade because they would have gotten worried when the market decided to reverse. So they would have either went out break even or they would have closed their trade as a whole at break even. Here's the thing, the market is entirely random, right? We simply cannot expect to time the market with pinpoint accuracy on every single trade. No, sometimes it has to consolidate a little before the eventual explosion towards your take profit. In this example, I want to show you the importance of volume confirmation. Let's mark out the high of our range and we do the exact same thing for the low of that same range. We play out price and wait for the first breakout, which we got already. The next thing we do is wait for the first breakout, which happened to the upside. And again, we're not going to be trading this breakout. We're going to wait for the second breakout. So let's continue to play out price here. And there we go. We had a breakout to the downside. Now, normally this is exactly where I would enter my trade. I'll grab my short P&L tool here and I would place it whenever we retested the low of this consolidation. And then I would basically go short. But there's one issue here, and that is the breakout candle not closing above our moving average. This immediately cancels out this trade because look at what would have happened had we ignored the volume. We would have gotten completely stopped out and this trade would have been a loser. And the only reason why we were able to avoid this loss is because we paid attention to the volume. Now, there is one thing that 100% determines your profitability regardless of your system, and that is your ability to manage risk. On my prop firm account, I aim for an average win rate of 40%, a 1 to 2 average risk to reward, and I only take one trade per day. Now, I have a static risk percentage of 0.25% on every single one of my trades. On my personal account, that changes a little, not the win rate, not the RR, and not the one trade per day. No, but my risk. I risk about 3% on every single trade that I take, and I do that consistently. Let me tell you this, when I decided to trade once per day, my entire trading changed. If I had to pinpoint one specific change that got me into the position that I'm in today, it would be the one trade per day rule. But here's the thing, this strategy is only half the battle. The other half is seeing these patterns develop in real time with other traders who've mastered this approach. And that's why I created my free private community where I call out all these breakout trades on a daily basis. No courses to sell, no hidden fees. It's literally entirely free. Inside, you'll find all of my personal trades, all my analysis, and you will get an entire video course all for free. I've already made enough money to pay my rent and live life exactly how I want to. And so my next mission is to build the single largest and most profitable crypto community the world has ever seen. And when I make it free, well, then I basically allow every single person to join. If that sounds of any interest and you're serious about your trading, well, then I would highly recommend that you click the link down below and join my team today. I'll see you on the inside.